You got to wonder whether Japan is a standout because it is benefiting from the uncertainty in China.
Well, Japan is benefiting hugely also from the fact that we just talked about the weakness in the yen currency, right? Because if you look at policy and how far it has diverged, that is putting pressure on the currency there. And of course, for a market like Japan, it's traditionally been very dominated by domestic investors. But now a lot of foreign investors, overseas capital is looking at that market as well, because not only do they have attractive fundamentals for across sectors and commercial real estate, they also have the benefit on top of that, which is the currency.
So it has a lot going for it. You got to wonder how much more upside, or whether you're already beginning to see perhaps signs of overheating.
Well, I wouldn't say overheating. Pricing-wise, that is certainly the one market in Asia-Pacific where we haven't seen downward pricing pressure and adjustments. But what we do see is, very interestingly, Japanese capital is looking now at overseas markets such as Australia and elsewhere in APAC, as well as in Europe and Americas. But in the domestic market for Japan, a lot of foreign investors are looking at assets, not just across office, logistics sector, retail as well. All three sectors, those traditional ones, are doing quite well.
From Japan, let's go to China. What's your take on it? Are there signs that this market is bottoming out or close to?
That's a really good question. Of course, when investors are looking at purchasing assets, they're also looking for that bottom in pricing. It's really difficult to assess that because it's difficult to put a mark-to-market price on an illiquid asset. And so what investors are looking for is the trades that have taken place, whether or not there has been a discount in pricing. And indeed, we have seen those come through. And so that is coming from some of the developers that are looking to dispose of assets, as well as foreign investors that have been holding. And so what we're seeing come in is the insurance companies with state-backed funding, as well as some of the end users that are occupying the spaces. They are stepping in and taking advantage of the pricing dislocation.
Pamela, I'm just wondering, for those divesting away from China, where are they putting their money now? Which markets are benefiting?
Absolutely. We're seeing a slew of markets benefiting from this capital flow. So the changes really occur when investors who would have been investing in China are now looking at other markets. India is one of the bright spots that we're seeing. It traditionally hasn't been as institutionalized as it has been historically speaking, but we are seeing investments going into that market. Another big market we're seeing is the Korean market. Again, traditionally very dominated by the domestic investors. A lot of the asset managers have come up against some liquidity challenges. And what we're seeing that is less competition within the domestics creates an opportunity for cross-border capital to go in and invest there.